Hi, welcome to the Market Alert for Friday, the 14th of July 2023. So, broke dollar mounting after soft PPI, crude, crypto and yield curve soar. And US stocks gained as softer than expected PPI numbers came out yesterday. Further data supported the case for just one more Fed rate hike. So, let's see if that happens going forward. Economic news for today. We've got the prelim UM consumer sentiment and the expectations, and then the G20 meeting apparently is starting today as well. Not that that should affect the markets too much. So just a couple of news items there. At 3 p.m. the market's going to make its own direction. So speaking of direction, let's have a look, see what it did during yesterday and kick off with the Dow. So in the Dow, market obviously trading up to that 34571 on Wednesday. Yesterday the market could barely get anywhere near it, actually trading up to where the market actually put in an 89% retracement before. And there you can see that weakness. The market down on the overnight. We can already see that we've taken out yesterday's low. Some weakness around here. Let's have a look in the 30-minute charts. Very choppy yesterday. We tried to move up but failed, and then stuck in the sideways range. Bit of a ramp up and down before the close, and then down to the S1 overnight, taking out the low. But the market attempting to come back to the low at the moment, and don't be surprised in the 7 a.m. German Dax opening of Europe that the market tries to get back above the low. And speaking of the German Dax, this still moving up to the upside. Yesterday, another day. This is 5 straight days. 1, 2, 3, 4, 5 days where the market's moved up and taken out the previous day's high, with a total of 731 points since a week ago today. So the DAX continuing to try and get above these levels. Let's just have a look at what these levels are. We've got the high there of 16,210, and then the high for yesterday at 16,186. Notice the market came up through the 89. It did stall at the 89 and had a pullback at this level. And then in the afternoon, with the US softer than forecast PPI numbers, the market moved higher, which you can see just at that point there. But when we got to the 89, this is where it was. The market had an hour trading sideways, mission accomplished. And like I say, then they moved it up. Nowhere near yesterday's low compared to the Dow, and neither is the S&P, which we'll look at the moment. But below the close at the moment, needs to stay above the DP and also the 50 EMA. It's Friday. They like the markets up if they can, but given we've had 5 days of the market breaking the previous day's high, it is due for a bit of a down day and a bit of a correction. But whether they will allow that or not, who knows, given that there's no news. We can see that we had a lot of buying at the start. We had the classic shakeout. We moved the market up before to the high, the previous day's high in the pre-market, which is always a handy thing to do. So you've already got the market when you look at the end of day where the high is breached from the previous day, and that's what keeps a bull market intact. Keep it simple. And 5-minute showing this yesterday, we traded up to the high in the pre-market when I was recording. As I mentioned, there you go, they ran it up to the high, brought it down, didn't go back up. So I'll tell you what, let's shake out everybody first. Obviously there's some selling around, let's shake it all out, and then we buy back in. We get back above the 200 MA, and they just move the market in one direction there. A bit of a pause at the 89% in the daily, which I've just shown you in the 30-minute. This is how it looked in the 5-minute. And then off we go again once we became oversold. Move the market up sideways, PPI numbers. Again, you see them buying back in and following the Dow to the upside there. Again, it's a piece of cake given. And then you can see how the afternoon and the evening panned out. And then in the evening we've had, or just before the close for the Dow, you see the electronic market selling off there. So let's just bring it up to speed. Overnight, now you can see that we've had a bit of a sell-off down towards the DP, but we soon found some buyers down at this level, and they brought the market back 62%, 78%. At the moment sideways, but notice we got some activity here at the moment in the futures market before the 7 a.m. open for this market. So let's move on and have a look at the S&P. In the S&P, let's go to the monthly, and you can see there that we're just hitting the 78% retracement. We've spoken about this for a couple of weeks now. The daily chart still moving up strongly. 1, 2, 3, 4 days in a row now the market's moved up. They bought in with the demand last Friday, and looking fairly strongish there. We've still got some buying coming in. We need to take out the high of yesterday, so let's have a look at the 30-minute chart. Like I said before, we moved higher yesterday, just continuing to do so. There's the kickoff of the cash market of the Dow. Coming back to the DP overnight, bouncing off this, it'll want to get above the close and then try and attack yesterday's high. Meanwhile, in the FTSE, it might have been 200 points the day before. It certainly wasn't yesterday. The 200 MA getting in the way there. 62% retracement, also causing a bit of grief for this market. 30-minute chart, you can see, has moved up, and overnight the market is currently below the close, the DP and the 20 MA, which it will need to get back above in order to move higher. If not, we could see a shakeout down to the S1 and the low. Meanwhile, in dollar land, continuing to sell off yesterday, having broken and breached that 100.835 level, which has taken a long time to do, but having now broken it, the market continuing to move lower, and the impact on the gold and silver market is this. Yesterday, surprise, and it is a surprise to see silver being allowed to move up, and yesterday straight through the 62% retracement, and also the resistance to the left here, which was at 24.53, so we're back above the 23. We're not at 25 yet by the looks of things, but attempting to move higher there. We've got 25. Oh, we might actually be above 25. I'll have a look in a bit more detail. Let's have a look. 24.86. We've had a high of 24.88 there. So no, we're not above 25. I didn't think we were. They don't like it getting above 25 at the moment, or 26 in particular. So yeah, 78 and 89 are the next upside targets. 30-minute charts yesterday. That's a first for a long time where they haven't saying that, they did shake it out with the PPI numbers, but the market was brought back as the dollar responded, because as the headline showed, they are expecting the Fed to only raise one more time, and that's going to be bullish for gold and silver going forward. So that's fine by me as somebody who's invested in this market. So yeah, take out the high for today is what we're looking at there. Big move though compared to gold, which barely moved yesterday, and of course central banks still wanted to buy this, so it's good to keep the price under pressure. 30-minute reflects this. Absolute mess as it traded in a sideways range, but you got the reaction to the PPI numbers there. So finally, gold-silver ratio, well, I mean, it's collapsed down to 78.96, below 80. That's a first for some time, back to May when we last saw this. So good news there. Okay, that's it for this one. Like I say, no economic news this morning. Market's going to make its own direction. The direction has been to sell off first and then bring the market back. Obviously, shake out the wheat longs, get people to go short, and then try and bring it back. But given that we've had 5 days of previous day's highs being broken, we are due for a bit of a profit take in this move. Okay, that's it for this one. Have a great weekend. As ever, thanks for watching. See you in the next one.